Bishop from Investec has been looking at South Africa's latest mining and manufacturing numbers. She doesn't have a smile on her face, but she's with us in studio. Annabel, what gives? Let's start with mining production. I was at the mining Indaba yesterday.
Yes.
It could be the worst of times.
You know, I think there is a lot of negativity coming from the platinum sector still. You know, you can't get those productions up and running immediately after the strike ends, and you saw platinum production down by 45%. So that was the big mover for the year-on-year move. You know, obviously mining production itself fell by 10%. But I think there's also a negativity in the sector because of this prolonged strike action. I think it's negatively affecting investor sentiment, and there is some concern that some foreign companies may even look to sell. So, you know, it's not a happy sector at the moment.
Have we hit rock bottom? I ask this because probably the highlight yesterday for me of the mining Indaba was Jim Rutherford from the Capital Group, who Sandy McGregor from Alan Gray says is the best in the world. So we got to listen to him. He said 25 years ago, South Africa had 40% of global mining production. We now have under 5.
Yeah.
With these latest figures, I guess it must be somewhere like 2 or 3. Now, is there a rock bottom? Because we still have the resources in the ground.
Well, you know, as you say, I mean, we had much better statistics. We used to be #1 in the world in terms of the gold production exports. You know, now we, I think, close to #5 or below. I think, you know, the reality is we do have the goods in the ground. We obviously need to extract them, and I think that the big issue is the political situation. And we've had 20 years of democracy, and I think it's really like any country that moves away from a very restrictive regime beforehand, and a lot of people are trying to settle down, find their place in the new society, and sometimes it can take 20 to 50 years before everyone's settled down and worked out where they need to belong. One of the concerns is that globally wages are probably closer to 50% of profitability in South Africa, and globally they should be closer to about 2/3. You know, so there needs to be some readjustment on that score as well. But the worry, and you know what maybe makes me concerned we haven't hit rock bottom, is the fact that there's so much aggression in the mining sector, so much disconnect between, you know, the private sector companies, between labour, even government policies. That's what I think needs to actually change.
Annabel, you spoke about the political situation, and the IMF is suggesting that we need to put certain reforms in education, we need to put reforms in, you know, in manufacturing, labour. Are these reforms being done swiftly enough? I mean, Alec is saying he was at the mining Indaba. There is some dialogue that's taking place. Are we just maybe very impatient?
You know, I think the reforms that they're looking at is probably the opposite direction to where that which we're going in. You know, the reforms they're looking at is greater labour market flexibility and greater ease of doing business. And we're going really in a very rigid government-controlled labour market, which is being exacerbated by the impact of the ANC's alliance members, COSATU, obviously the SACP, really going for some quite strong regulations to try and constrain businesses and how they do business. And I think all of that just eats into the time of corporates and actually reduces their ability to grow and produce more and obviously employ more individuals. So from that point of view, I would suggest the IMF is suggesting something different to what we're doing.
Totally. Well, it was a very interesting point that Rutherford made yesterday. He said that the intellect of South African government is being shaped at Sussex University, which is one of the most left-wing universities in Europe. Thabo Mbeki, Issa Pahad, and now Rob Davies. That, if you're on that path and everybody else is on a different path, when do you start smelling the coffee?
Well, I think that's pretty much what's happening, you know, in South Africa, that there's a very negative attitude towards capitalism, and there's a failure to understand that that is how the global system works. You know, so if you want to be a global player, if you want to take advantage of what's happening globally, benefit from a lift in global economic growth, and we are a small open economy, so we have no other choice, then I'm afraid you have to play by global capitalism rules. And, you know, following a very left-leaning approach is concerning if it becomes overwhelming and causes economic growth to slow very dramatically, and that is something that has happened in South Africa, because if you look at a lot of the regulations that are coming through, the threat to property rights from the Promotion and Protection of Investment Bill, that is a very left-leaning document which really does seek to remove property, as is the bent of communism, from private sector hands. So there's a few others as well, the Appropriation Bill, Expropriation Bill. There's some worries coming through, and business is not stupid. They see these bills going through, and this is the policy uncertainty. This is what's damaging business confidence.
So when does the coffee, when does the coffee start waking people up?
Well, that I really can't tell you, but I would hope that, you know, a chronic slowdown in economic growth like we've had this year would perhaps give some, you know, learning that we can't actually go through another year of strike action like this. 6 months for one sector for a strike, even if it is to big degree driven politically. You know, the emergence of a new socialist party trying to obviously get support and, you know, driving a lot of the activity on the ground. You know, if it negatively affects economic growth, if it damages government revenues, if it means the budget deficit is going to deteriorate significantly, if it results in more credit rating downgrades, I think there needs to be a wake up in terms of, you know, whether that's a path we want to be on.
Annabel, but there must be some good news from all of this. Yes, you've got these, you know, this data that came out, mining manufacturers not looking great. But then again, we had the minutes from the FOMC. We did see some rand strength, and this has been on the back of a weaker dollar. But perhaps let's look at what the South African Reserve Bank might do because of this.
Yes, yes. You know, you make the points I wrote in my piece yesterday. I think that it is very positive that we saw the Federal Reserve coming out and trying to calm the sentiment a bit. You know, there was an expectation that perhaps the lift-off or first upward movement in interest rates in the United States would be very quick next year, quicker than anticipated. I think the Fed's really put that concern to rest, but they are still saying there will be obviously a lift. So, you know, what it means for South African monetary policy, I think our governor that's coming in, Lesetja Kganyago, waiting in the wings, he's going to be very strongly focused on inflation, as he has said in his recent speeches. And luckily for us, CPI inflation looks like it could tip down in September to about 5.9 or 6%. So coming back to the top of the target or actually falling inside it, I think will be quite positive and should obviously assist in not giving us an interest rate hike in November. I would find it difficult to justify one, given the sheer weakness of the economy. And of course, you know, we are obviously still going to go into an upward interest rate cycle. We've already had 75 basis points, possibly maximum another 3 to 3.5, you know, if you follow the Fed trajectory, and Lesetja has said the Fed trajectory is very important to mirror. But, you know, in South Africa, obviously the concern really is that we need to limit ourselves because of this very, very poor, weak economic growth. So let's hope that, you know, we don't see fiscal tightening at the same time. Higher personal taxes have certainly something that are being looked at quite closely by the Davis Commission. I worry that going out to 2018 we get tighter monetary and tighter fiscal policy simultaneously with an economy that's not going to see much lift-off because we're a commodity exporter.
Well, maybe that's what's needed to get the Sussex University mindset
mentality
off the table at last.
Annabel, thanks so much. That's thanks to Annabel Bishop. She's a chief economist at Investec.